Hi, everyone. This is Lori Montoya here with Santa Fe Realty Unlimited, bringing you Lori's insight, all insight to all things real estate and all things Santa Fe. Today, I'm here again with Robert Hill with Van Dyke Mortgage, and we are going to talk about credit repair. So thank you for joining us, Robert.
Yeah, glad to be on again.
Great. So a lot of people are always asking me about credit repair. What does their score have to be? Things like that. So can you let's start this off by answering the question is what does an average score have to be in order to get a loan to purchase a home?
Yeah, that is a great question because a lot of people are like, what's my minimum? Or a lot of people assume that, oh, I need a really high credit score, like an 800 score just to even get a good rate. A lot of people are very rate conscious. Really, to answer directly to those questions, it's 580 is your like bottom of the line minimum that you need to qualify. With that, sometimes comes contingencies, and a lot of it has to do with underwriting. And I'm sure a lot of people have heard what underwriting is. It's kind of ambiguous a little bit on what it is and why and all that fun stuff. But at the end of the day, it comes to what's the automated underwriting software. So what happens is you take a loan application, and I get all this data from a person, and then I plug it into a system, and then it fires back and says approve or not, essentially. Obviously, depending on what's going on with that data, I can manipulate it to show a scenario, say like, oh, well, maybe they don't have enough cash in reserves, right? Months of reserves might be one of those contingencies for somebody with a lower credit score to have. What that means is, say your more estimated monthly mortgage payment is going to be like $1,000. They want to see 3 months of reserves, six, whatever, just to get you to approval status. So that means you got to have at least $3,000 in the bank after closing just to be able to do that. Now, the other thing too is cash close, right? That's typically another issue as well. That's just the minimum program for if you have some down payment, 3.5%, 580 credit score. Your next level up for a conventional loan or even for some down payment assistance, like we've mentioned in some of our videos, was 620. So those are your minimums. You don't necessarily have to have an 800 credit score to have like a really good rate. It just depends on the loan program, and you're probably ballpark of where you want to be is definitely in the high 600s minimum, preferably obviously in the 700s somewhere would be ideal, just because you have a lot more flexibility with whether you want to go FHA or conventional and things like that. There's a lot more that goes behind it for that, but that's to answer your question directly. And then some other folks who are just asking the minimum or maximums, high 600s, very minimum 580 with some contingencies, and you don't need that 800 score necessarily to qualify.
Great. That's very helpful. So for people that don't have the high credit scores, but they want to get that because they want to have an option, different loan options available, what's the best way to repair that?
Yeah, that's a great question. And if you don't mind, I'm going to share my screen for a sec.
Please do.
So this is kind of the infographic we like to show when we talk about this. And let's see, you're seeing the FICO score circle, right? Did I do that right?
Yes.
Okay.
I'm trying to move us over. There we go.
All right. Yeah. So what you're seeing here is essentially what makes up your credit score. And that I'm sure some people have seen this, but really what I want to highlight here is the amounts owed, because that's the biggest thing that you can control. This is what's going to boost your score. Say you're at like a 600 score and you're just trying to get to that threshold to qualify for first time buyer, like over 620. You're going to like your accounts, your credit revolving accounts. And that's another thing too. This is basically what that is. And we'll talk about that here in a second. But payment history, your history, right? That's going to be your next thing. So the longer you have something established, this is why I typically don't tell people to pay things off necessarily, or say you have like a car loan that, yeah, maybe you paid off or something. Like, so actually, better example would be like, I have like a Zales or like Helzberg Diamond, a credit card from way back when that I've paid off, but I still haven't closed the account. That's the important thing. Keep every account you possibly can open as long as possible, because that's going to play into your credit history, as you just saw in the chart there. That's like a pretty big bulk of it. But that's not necessarily something you can control, because at some point they might just close your account automatically. Keep your, a lot of people say 30% under balances your balance is under 30% of the limit. So say you have a credit limit of $1,000, you want to keep your balance around 30% of that. Now that's just if you want to keep it at par, like wherever your credit is. And if your balance is much higher or even higher than the limit, it's going to affect negatively. It's going to bring your score down. But if you want to boost it, you want it at 3% or lower. So that at that point, if your limit is only like $1,000, you're probably only limiting yourself to putting like maybe $30 on that card at towards the end of the month. Once it comes up due, that payment has to be due. So keeping $30 on the card once that payment comes due is important. Definitely not zero. A lot of people think, oh, I paid off on my card, that's great, fine. No, don't do that, because again, it'll keep it even keel. It's not going to, because at the end of the day, the credit reporting agencies, all they want to see is good, responsible use of credit. And if your your cards are at zero, well, you're not using your credit. They just want to see you using it and using it responsibly and having those balances super, super low, $3 even, right? Get under that $10 limit if you can. Once that card comes due, that's what they want to see.
Okay. That is definitely helpful, because I know a lot of people, another question that I get is a lot of people that I know, they're afraid, some people that I know are afraid to get credit cards, not everyone, but some people are, because they're afraid that if they get the credit card, that it's actually going to hurt them. And it's good that you're talking about this, because it explains how credit cards are actually helpful for people and that they're important to get.
Yeah, and that's the thing too, is people don't fully understand. I didn't before I was a mortgage loan originator, about the types of credit and why they are the way they are. And a credit card is revolving credit, like like an auto loan, something where there's a start and finish time of paying off that loan. That's an installment credit. And a mortgage loan in and of itself is a whole separate type of credit as well. So having those things of diversification of your types of credit also helps. So you'll find that once you do close on a transaction with a mortgage, the second you pay that mortgage, and another 2 months later, or 3 months, it starts reporting, you'll see your score might actually go up as well.
Great. Any other insights on credit repair that we need to be aware of?
Yeah, I think that kind of takes care of it. If I was going to say anything for giving, I don't know if we don't have much more time for it or not, would be paying off collections. Say you're in that situation where you're trying to repair your credit. If you're trying to buy a house, or you're right to the point where you want to put an offer in or something like that, don't pay those collections off. It sounds pretty counterintuitive, but we always tell people don't do that, because any changes leading up to or even in mid-transaction could reflect negatively on your credit. So whatever happens, you pay off a collection, what happens is it then goes into a paid as derogatory is the term that they used. Right, so it's great you paid it off, you dealt with that debt, and that's behind you, but that's only going to help you way further down the road. Whenever you have a collection, it's essentially just putting a glass ceiling on how high your credit can go, and it'll probably hinder it from like getting boosted, as we just talked about, quite as much. But at the end of the day, it's going to, like that month after that you pay that off, it's actually going to bring your score down a little bit because of that derogatory status. But that derogatory status, when it gets pushed away years and years and years later, well, then you're probably in the clear to be able to get an 800 score if that's your goal. That's, I think, about the only last tidbit I'd like to say is whenever you're in transaction or you're trying to buy a home, definitely consult like a loan officer like me or something like that to know what you should or shouldn't do leading up to that point. Because maybe you're thinking or assuming or Googling something that says, oh, you just make sure you have no collections or something like that, or in dispute status. Being in dispute status too, can't close on a loan that's in dispute. So that's something you want to be mindful as well. So don't just assume what you see on Google is entirely true.
That's so great, Robert. Thank you so much for meeting with me again today to talk about this. I think it's very important for my viewers out there to know about this, because that's one of the main things that stop people from purchasing a home. And most people want to get a home and have that feeling of home ownership. So again, thank you for bringing to light a lot of this information. We really appreciate it.
Yeah, absolutely. And obviously, I have my phone number back here. If you want to shoot me a text or something, if any of those folks out there have a question, because my services, Yeah, I was gonna say my services are free essentially, and you pay everything at closing. So if we don't close, you don't pay anything for trying to do credit repair, which I don't do, by the way. I'm not gonna say that I do credit repair, but I can help at least a little bit along the way.
Yeah, and I just wanted to say that we always put your information in the videos as well. So
Oh
if
yeah,
anybody wants to reach out, it's definitely there for you too. So again, thanks again, and we look forward to our next talk.
absolutely.
All right, bye-bye.
Bye.